Producing over 500 hours per week of talk radio, GCN Live is a world leader in talk radio. Archives for the following program can be found at gcnlive.com.
1-855-905-MY-TV. 1-855-905-MY-TV.
The stocks discussed on Wall Street Raw are not in any way a recommendation or solicitation to buy, sell, or hold. If considering on acting on information, we first recommend you seek out a competent, licensed professional for advice.
What kingdom has sent you?
The kingdom of the Most High.
Nothing you have ever experienced can prepare you for the unbridled carnage you're about to witness. Super Bowl, the World Series, they don't know what pressure is. In this building, it's either kill or be killed. You make no friends in the pits and you take no prisoners. 1 minute, you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The Genesis Communication Network is proud to bring you Wall Street Raw with nationally recognized market timer and previous Wall Street Week elf, Mark Leibovit, welcoming you on board his financial time machine. And here is the elf himself, Mark Leibovit.
Good morning, everybody. Good morning. Welcome to Wall Street Raw on this Saturday morning, January 16th. No other day like it, and we certainly appreciate you joining us here. You have other choices on a Saturday morning. Of course, the markets are a hot subject this week, so that might be a good excuse to listen to what we have to say, but it is always volatility in the markets, and I consider myself a survivor, having been doing this, believe it or not, for 35 years. So we've seen a bit on the upside and the downside, and what we're seeing now is no great surprise. Meanwhile, we do have a couple guests on the show this morning. We have Gerald Burden joining us on segment 3, my good friend Sinclair No on segment 2. And I'd like to remind you that you can find out more about my services, my financial newsletter at vrtrader.com, or you can go to wallstreetraw.com. That's VR as in Victor Robert, vrtrader.com or wallstreetraw.com. We do cover the gamut. We have daily newsletters that cover individual recommendations as well as general market commentary, gold letter, vice letter, and so forth and so on. So our annual forecast model is now available as well. So I would check with vrtrader.com to get more information on that. Also, we have a link to wallstreetrawhealth.com. That's wallstreetrawhealth.com, where you can avail yourself of Dr. Joe Wallach's products, which I've been using for many years. By the way, if you do go to the website, there are 2 products that you don't have to pay for. We do produce a Vice News Raw report and a Gold News Raw report. Just come to the website. No credit card is needed. You can sign up and get copies of those. We do produce those regularly, so something you definitely want to check into. Meanwhile, what can we talk about here this week? And there's so much to talk about. The second trading week of 2016 was not much better than the first, as the stock market extended its January decline. The S&P 500 lost 2.2%, extending its drop now down to 8% for the year. I've talked about this for a long time. The January barometer is a valid indicator. It was created by an old friend of mine, Yale Hirsch, back in the 1970s. Basically, it tells you the first 5 days of the year could be an early warning sign for the year as a whole, and the net change for the month, comparing the end of January to the close on December 30th, would also provide you with an indication of the year at large. I know it's an arcane indicator, but it worked in 2015 when we reported to you that that was bearish. Of course, any market decline is an opportunity at some point. Bear markets don't last forever. Of course, this one may have just started, so we're going to have to wait for some confirmation. We do have intervening forces, such as the Plunge Protection Team, which is a working group of financial markets, an entity signed into law by Ronald Reagan back in 1988. We do have the Federal Reserve out there that could, in theory, start a QE program again, even though they're admitting now they don't want to do that. But at the same time, they have allies around the world. You've got Japan, which is more than comfortable in devaluing its yen, which drives money into the equity markets. China is out there, so far unsuccessfully, but devaluing its currency, but also supporting its market, which has been attributed to the big decline here. Of course, you got Mario Draghi in Europe forcing interest rates to the point where they're negative and driving money into equities. To be fair, volatility between Monday and Thursday this past week left the S&P 500 flat as the week as Thursday's close, but broad-based selling to Friday set the benchmark index to its lowest level since October 2014. Furthermore, the S&P 500 registered its lowest weekly close since April 2014, with 9 sectors posting weekly losses between 0.2%, telecom, and 4.4% for materials. The countercyclical utilities sector was up 0.7% and eked out a slim gain for the week as lower Treasury rates kept the rate-sensitive sector afloat. As you know, I have been positive on the bond market and have been for many, many months, despite the street's apprehension regarding Janet Yellen's raising the very short-term overnight rates. I think it's a flight to safety, of course. Investors' focus remained on China at the start of the week as the People's Bank of China took steps to stamp out speculation in the yuan. As a result, offshore yen liquidity tightened, sending the overnight Hong Kong Internet Bank offered rate to 66.8%. The rate dropped to 2.1% by week's end, but the People's Bank of China was not done there, engaging in large-scale liquidity injections into capital markets. So far, it hasn't worked, folks, but they're out there trying to support the market. The dive in global equities was accompanied by selling in the energy market, which pressured crude oil to its lowest level since 2003, getting down to $29.45 a barrel, with 5.7% slide taking place on Friday alone. We also know the International Atomic Energy Agency will release a report that will pave the way to lifting oil export sanctions in Iran. That's coming as well. So the market also received its first batch of quarterly earnings reports this past week from the financial sector, coming in roughly in line with expectations. However, it is worth noting that both Citigroup and JP Morgan, a couple of our favorite banker companies, increased their loan loss reserves for the first time in 6 years due to their exposure to the energy sector. Many of the commentaries you do here are tying the decline to the crude oil market and what's happening there. There is a statistic which I can't prove, but I have read this, that about 40% of U.S. jobs are one way, directly or indirectly related to the oil industry. So that's really the case in the driving down of oil prices here, which I consider part and parcel of manipulation. And we get into that whole story regarding what goes on the COMEX and in terms of paper trading in these markets. If that is the case, obviously that's affecting the economy to a great degree. But we might as well touch on that real briefly about the minute or so we have left. I talk about this in the gold market as well as the crude oil market. The big declines, seem to be supported by fundamental news that supply is low, supply is great, and that's driving the prices lower, that is. But if you look at what the trading is doing on the COMEX, we see a lot of paper trading, and I note this in the gold market quite often, where physical delivery is not really part and parcel to the event, and cash settlements really take the course. And this is most notable in the gold market, where these markets were created to hedge originally agricultural products, and farmers would use the futures market to hedge future delivery of their physical products. But we see now, with all the paper floating around and the manipulation, big traders or governments can go in there, hit the bid, drive crude oil prices down without never making delivery on the contracts. In fact, the exchange has cash settlements now, as I just mentioned, even in the gold market. So a lot of manipulation going on there. I think that's what drove gold down. I think that's what possibly drove crude oil down, and there's a bit of a manipulation. We know the Saudis were trying to depress prices to offset the big boom we had here in the U.S. in the oil market. So a lot of manipulation involved here. And with that in mind, you know that it could reverse and go just the other way as well. So we have to keep our antenna out there about a possible bottom. Stay tuned. My friend Sinclair Noe will be with us here on segment 2. We have a lot to talk about.
You're listening to Wall Street Raw with Mark Leibovit. Go to wallstreetradio.com for information on Mark's newsletters and products. Stay tuned. Mark will be right back.
Paid non-attorney spokesperson Adam Pileski of the Pileski Law Firm of Principal Office in Houston, Texas is the attorney responsible for the content of this ad. This ad is not legal advice, and the choice of a lawyer should not be based solely upon advertisement. Services may not be available in all states. Attention Xarelto users. If you or a loved one took Xarelto and suffered a serious bleeding event, you may be entitled to financial compensation. Xarelto is a popular prescription blood thinner used to prevent blood clots and protect patients from strokes. These serious bleeding events have led to numerous cases of hospitalization and even death. Phone lines are open 24/7. Call 800-261-0937. That's 800-261-0937.
As if chlorine in our water weren't bad enough, now they're adding ammonia?
It's true. Some municipalities are now adding ammonia plus chlorine to your water supply. It's a disinfectant called chloramine. But with a trusted Big Berkey water filter, you can keep chloramine out of your water. New NSF EPA certified lab tests show EPA Berkey water filters remove chloramines, pharmaceuticals, BPA, pesticides, bacteria and viruses, all forms of fluoride, and much more. Big Berkey water filters are the original and most trusted on the market. The gold standard in water purification. And our filters last for years at less than 2 cents per gallon. Big Berkey, the one that's powerful enough to purify stagnant pond water. Get your Big Berkey today. Call 1-877-99-BERKEY or click BigBerkeyWaterFilters.com. That's 1-877-99-BERKEY. Big Berkey Water Filters, for the love of clean water.
Owe $10,000 or more to the IRS?
Get on board with the Tax Admiral. Don't pick on the IRS alone. I'll cut penalties and reduce your overall tax bill. Sometimes I can even get it zeroed out completely.
We're an A-rated company helping people clean up their mess with the IRS.
If you owe $10,000 or more, then call the Tax Admiral.
Call 800-287-7180. Again, that's 800-287-7180. 800-287-7180.
A lot of people's lives and bodies are out of balance. AlkaVision Plasma pH drops optimize pH level and get rid of harmful waste and acids. Just a few drops in water restores vibrance and energy and gets you back in balance. Now order 2 bottles and get $10 off your order. Sign up for monthly auto shipping and save 25%. Call 800-518-7615 or visit alkavision.com. Alkalize your body. Supercharge your health at alkavision.com.
The Genesis Communications Network is one of America's premier broadcasters of captivating talk radio. We thank you for listening. Now, just imagine, there are thousands of people who are just as passionate about radio as you are. But what you may not realize is how easy and affordable it is to advertise with us. Radio commercials for your business could be heard on hundreds of radio stations across the U.S. every day. We can help you by creating an effective radio advertising campaign for your company. From script writing to producing your commercial, just like the one you're listening to right now. No other network provides the level of customer service we do. When it comes to radio advertising, we are your one-stop shop. And no matter how big or small your business is, we can help. Email us at advertise@gcnlive.com, and an experienced advertising executive will help you take the first step towards driving more customers to your business or website. Advertise@gcnlive.com. Easy, affordable, effective.
This is Dan Pilla. Do you owe the IRS money you can't pay? Are tax debts crippling you? I've defended people from the IRS for over 30 years. I've helped thousands, and I can help you too. I wrote the book on IRS settlement, and I'm telling you, there's no such thing as a hopeless case. Call 800-34-NO-TAX to finally get free of IRS debt. With the IRS's new programs, there's never been a better time to solve your problem. Call 800-34-NO-TAX That's 800-34-NO-TAX or my website, danpilla.com.
Keep the change. Think big. Think positive. Never show any sign of weakness. Always go for the throat. Buy low, sell high. Fear, that's the other guy's problem.
Welcome back to the Wall Street Raw radio show with Mark Leibovit, your time machine for the financial markets. Want to know more? Go to wallstreetrawradio.com. Now, here's the elf himself, Mark Leibovit.
Welcoming back my good friend Sinclair No from 1510 KFNN Phoenix and author of the great blog, eatthebankers.com. Hi, Sinclair. Thanks for joining us Saturday morning after a cataclysmic week on Wall Street.
Cataclysmic, that's the word for it, I think. We heard that from, I believe that was Royal Bank of Scotland this week that said cataclysmic. Cataclysmic year where stock markets could fall by up to 20%. Oil could slip down to $10 a barrel. When they said it earlier in the week, it really sounded kind of wild, but basically we've been hearing that from all the major investment banks this week, and sure enough, we finish up the week with the S&P 500 dipping down and taking out the August 24th and 25th lows. So the floor has been pulled out from underneath the market as far as I can see.
And the Dow still had some catching up to do. It hadn't taken out its August 24th low, which is closer to that 15,300 area. So there could be some more room here if the Dow wants to get caught up a bit. But an interesting point you made in the blogs, we're talking about all this pessimism. First, it's surprising that the brokerage firms would be outright pessimistic. Usually they're encouraging you to stay in the market. We know the bankers aren't very good about protecting our money, and they'll let us, watch us lose 50% of our accounts before they warn us that there's a problem. We've seen this in the past with the brokerage firms, but here that they're warning us, so the thought comes up, and I think you raised this point about, is it really a contrary thought that maybe we should be buying and ignoring them?
Does it really mean that the markets are collapsing, or is it a contrarian indicator? And you've talked about contrarian indicators over the years. When you see the headlines, when you see the front page stories saying the market is collapsing, that's usually when the market bounces.
We need a cover story. We need a cover story somewhere, right?
Yeah, I used to love it when you'd bring out those cover stories when you were making a speech someplace, Mark. That was always great. But I don't know. Maybe we are. We are in a downtrend. There's no question about that. So maybe there's more to go. And I think one of the most interesting warnings came not from the investment banks, but from Standard & Poor's. They were talking about corporate borrowers worldwide. And they are saying that we are seeing a big potential for downgrades, corporate defaults at the highest level since 2009. They think there will be even more moving forward. And we are seeing this starting to play out. Question is, does it get to the point where it freezes up the markets like it did in 2008? And, of course, so many of the corporate defaults are originating in the oil patch, the energy sector.
Right, and who's going to bail out the oil companies? Bernanke's not there bailing out companies as he did back in 2008-9. If you remember back then, there were stories when we had the Freedom of Information Act used to come in and to check what was going on back there. And we found out he had funded companies like Harley Davidson and others privately, which we didn't even know about. So the question is Janet Yellen that accommodative, that she's going to come in and start secretly bailing out companies?
The Fed has said they would not bail out more companies along the lines of a 2008 bailout. But if we start to see these defaults, if it starts to freeze up the credit markets, what then do they do to unfreeze the credit markets globally? And I have a feeling that we're getting closer and closer to a point where they could freeze up the credit markets. Dallas Fed President Robert Kaplan this week was saying that the Texas oil industry is likely going to see more bankruptcies, more mergers, more restructurings. That's from the Dallas Fed. I mean, this guy's based out of Texas. That's not the way they talk in Texas.
Well, here's the question. We've had a 6-year bull market. The internal market was deteriorating since last year. In fact, let's talk about that January barometer, Sinclair. I mean, the first 5 days of 2015 warned us that there might be a problem last year, and for most stocks there were a problem, even though some of the FANG names, like Facebook and Amazon and Netflix and Google seem to have held up. Most market participants didn't do all that well last year. Now we have the first 5 days clearly down in 2016. That's pretty ominous.
And it seems like everybody's getting hit now for the most part. I mean, even a Google is not immune to something like this, even though they're really not at all in the oil sector or the energy sector. The damage is pretty widespread. And, yeah, you've covered the January barometer. You do your annual forecasting model, which I'm really looking forward to seeing this year, because I'm guessing that it's pointing at this point to a very negative year. The question is, how negative could it get?
Right, and Yale Hirsch actually inspired me on that January barometer. In the last day of the month, January, compared to the close in December, is your confirming indicator. So let's see how the market acts between now and the end of January. But, with a political year and with all those cross currents out there, you would just think that that old plunge protection team would be in there, and they couldn't afford to have a market crash this year. So it should be interesting what happens here the next couple of weeks. If we, as you say, the S&P did get under the low, Dow takes out the low, will they hold it there, or are we really going to fall off the cliff? It's really a very interesting time here and a very significant time.
Right now I kind of feel like Wile E. Coyote. He's gone over the cliff, the legs are still spinning, but there's nothing to support him.
Right, and that's where we're at right now. So, basically, it's a wild year, due for a bear market or a correction of some kind, and we're going to see if they're able to keep the Indians from jumping into the fort, huh?
That's about it, I guess.
That's about what it is. Of course, I'm not politically correct by saying that, but that's what the traditional viewpoint would be. We're trying to keep them out, but at the moment, it doesn't appear all that great. Sinclair, thank you for joining us on a Saturday morning, and hopefully next week we won't have gone off the cliff and the market would have held. But for those who are out there who are in the market, it's definitely a time you got to look to protect your assets and to be careful about what you're doing or not doing until it's really confirmed that this is all over. Thanks for joining us, Sinclair, and we'll be with you next week.
Thank you, Mark. Always a pleasure.
Again, Sinclair, thank you again for being with us. And Sinclair, thanks for mentioning that annual forecast model, which is available, and I mentioned this at the top of the hour. If you go to vrtrader.com, you can sign up for it. We've been producing that model since 1987. In fact, the first one we produced in 1987 warned that we could go off the cliff. And in fact, I actually was on national television talking about that at the time on the Louis Rukeyser Wall Street Week program, talking about watch out for that nasty slip the third week of October, and that was all based on that forecast model. So go to vrtrader.com and we'll get a good sense of it. It's only one indicator, but we also track it for the other major markets as well. You'll see in the report, but it'll be real interesting how this plays out for 2016 to give us some sense of direction during the course of the year. And of course, even though the markets are down sharply now, it doesn't mean they couldn't reverse perhaps by mid-year or the end of the year. So very interesting time. So stay with us. We're going to have another special guest with us on segment 3, and we'll be back with you on segment 4.
Go to WallStreetRawRadio.com for more information on Mark's newsletters and products. Stay tuned. Mark will be right back.
High-performance investors and traders use superior financial tools to achieve superior returns. You have that tool with Mark Leibovit, nationally renowned top market timer, legendary television Wall Street Week elf, and nightly business report market monitor, who shares with you his unique market tools and commentary at WallStreetRaw.com. At WallStreetRaw.com, Mark provides you with his latest ideas on how to help build and protect your wealth, help you avoid the next big market crash, and also stay healthy to enjoy your wealth. Mark has a special free gift for listeners of the Wall Street Raw radio show. Go to wallstreetraw.com and sign up for his free weekly Vice News Raw report. While there, go ahead and sign up for his free Gold News Raw report. You will receive both weekly, and both are totally free. No credit card information is required. Sign up today for your free Vice News Raw and Gold News Raw reports at wallstreetraw.com. That's wallstreetraw.com.
As your body ages, there's a 10% decline in your ability to repair each passing decade after the age 28. By age 40, your ability to repair from demanding manual labor, exercise, or a stressful desk job has declined by 12%. By using One World Whey, you supercharge your body's ability to repair and eliminate inflammation. Our unique frequency-encoded whey protein, coupled with our high-quality whey, improves your cell's ability to make protein, which is to say, repair itself.
My name is Jonathan Wright, and I'm 40 years old. I recently went from a desk job to a manual labor job. Normally, I'm worn out. With Energy Enhanced One World Whey, I now recover so quickly that I can perform very hard work all day long. I use Energy Enhanced One World Whey for breakfast and lunch, and I experience less hunger throughout the day. I have a 30% increase in energy, and I just feel better. I plan to make Energy Enhanced One World Whey a permanent part of my lifestyle.
Call 888-988-3325 or visit oneworldwhey.com. That's oneworld, WHEY.com.
By now you know that wireless technology like cell phones do in fact pose dangers to the health and privacy of everyone. Blockit Pocket's wide range of products are unmatched in providing the protection you deserve. No scare tactics, just common sense. BlockitPocket.com offers quality American-made options to alleviate and eliminate these invisible dangers. Learn more at BlockitPocket.com or call 888-315-9618. BlockitPocket.com, enhancing health and privacy.
Are you worried about your mom or dad living alone in their house? Hi, I'm Joan London. Listen, I know how difficult it is to find senior care for someone you love. That's why I recommend a free service called A Place for Mom. They are the nation's largest senior living referral service. Call A Place for Mom today.
To receive free information on senior living communities in your area, call A Place for Mom at 1-800-704-6182.
A Place for Mom offers free one-on-one advice from local advisors and a personalized list of senior living communities you can visit. If you have questions about senior care for your mom or dad, there's a place for answers, A Place for Mom.
Call A Place for Mom in the next 10 minutes to get your free ebook on financing senior care as well as free information on senior living communities in your area. Call 1-800-704-6182. That's 1-800-704-6182.
Are you looking to sell body armor? Want to make extra money selling body armor at your local gun shows? With low minimum buys and great returns, KD Armor is the answer. Make money in your spare time. It's American-made body armor with the quickest turnaround in the industry, which means you get your product when you need it at very competitive rates. And they'll ship it to you for free. If you own a business, give them a call today at 855-488-KD. That's 855-488-2284. Or go to kdarmor.com. Come and take it.
Anything that is thy neighbor.
Welcome back to Wall Street Raw. Want to know more about Wall Street Raw and the Leibovit VR newsletters? Go to wallstreetrawradio.com.
My pleasure to welcome a special guest on our show this morning, Jerry Burden, who's the chairman of Wall Street Media. He's a founder of numerous public and private companies. and his latest accomplishment is the founder and president of Wall Street Media Company, Inc., a public company that's traded on the OTC QQB with the symbol of WSCO. Jerry has been in the financial industry as a venture capitalist since the mid-1980s, funding and developing first-stage companies, and he successfully completed reverse mergers and acquisitions and numerous companies throughout his career, and continues to do so. Jerry, thank you for taking a few moments with us.
You're quite welcome, and thank you very much for having me. It's a real pleasure.
So let's talk about the current state of affairs on Wall Street. How do you read that?
I'll tell you exactly how I read it. The current state of affairs these days on Wall Street has to do with the enormously fast-changing times we find ourselves involved with. The technology is almost overwhelming, and I don't know whether you have seen what's happened recently with the different brokerage firms that have been there, but it's being taken away from the brokerage firms and given into the hands of the people. For instance, the IPO that was done on GoPro, the famous camera that the police and everybody else are using now, was actually funded by a social media group, and that takes the power out of Wall Street and puts it in the hands of the people. So that now we're looking at IPOs that are actually funded away from Wall Street, out of Manhattan, where the average person can actually get in on the IPO of some of these greater and bigger deals. So
that's fabulous. So now we have, well, I guess what you know is crowdfunding, right?
Absolutely, and we're putting up a platform for crowdfunding on Wall Street as well, and also we very much like the incubation side of it. This is America, where great and unusual and useful technologies and products are invented on a daily basis. And where can we showcase these? If we had a place to go, let's say we had Wall Street meets Main Street, let's change the entire texture and the way that people are looking at Wall Street and the perception of Wall Street, where these smaller companies with these very invaluable devices and technologies are coming through. Now we have a place to be able to view those. That's what we're looking for in 2016 for Wall Street, is to change our theme from Wall Street to Wall Street meets Main Street. And there you can see the crowdfunding as well as the incubation systems across the country, and see for yourself some of these great deals and have an opportunity to invest.
The small investor can get it now with just small investments, which is really great. Isn't that's the big plus of this whole transition, isn't it?
Oh, absolutely. And it's really time that the power was taken out of the hands of the few and given to the 99, so that we all can participate in, the very backbone of the American financial culture is the entrepreneurship and the invention of these new and necessary products. Even Microsoft started in somebody's garage. Bill Gates goes way back for them, but that's where we are today, seeing many, many useful things coming about. Where can you go to see all of these in one place? You can go to Wall Street. Also, we're looking at the ability to be able to trade your stocks right on Wall Street. If you see something you like, then you just simply plug in a very simple apparatus, fill out your form, and you're able to trade stocks on Wall Street and keep informed with live updates, 15-minute delay quotes, news, press releases, all the appropriate information. It's going to be exciting.
There's so much controversy surrounding the high-frequency trading, Jerry, about what's going on, if stocks are being manipulated during the day because of the fast trading that's going on. How do you read the HFT situation?
Well, actually, I think it's well enough time that we had high-frequency trading, or HFT, come into play out here. Actually, it was started with a young man and a group out of Royal Bank of Canada. They were interviewed and picked up the term of the Flash Boys, Brad Fitsuyama, and his group actually developed the first high-frequency trading, which is a series of many layers of high-tech fibers, so that they can actually take out the nanoseconds out of the trading, because there's huge leakage, anywhere $50, $80, $100 million a day leakage out of the big market exchange when the market closes, because those nanoseconds are actually, when you're talking about this much volume of stock out there, actually very, very important and valuable to the whole trading community. Now we've tightened up this to a point where I think high-frequency trading is going to be absolutely the way that everybody trades in the future. Without that, it's like having no high-def TV, and that's not anything but of the past. So we're looking for a bright and exciting future, which actually protects all of us much better.
In the minute we have left here, Jerry, tell us a little bit about what you're doing now with your company, WSCO.
Well, what we're doing is we're out on the public market. Our company is trading on the OTCQB, and we're getting ready to do a secondary offering. And we would like to have the public join with us and really understand our vision. We encourage the public to write in articles to wallstreet.com. It's on the front page of Google, Yahoo, and Bing, and we would like to see the American public's opinion of this. Also, we'd like to very much lean towards the students and the universities of the colleges and have them be involved because they are our future, and they're the best communicators around. So if we had a highlighted student on each of these campuses, we're looking at all the incubation, we're looking at all the new technologies, we have one portal that we can go to. I think that's really going to be a very pleasant and unusual place to find the exciting new things happening in technologies, new forms of alternative energy, new cutting-edge biotech, everything that you need to see that's going to keep you informed. Very briefly, sort of like the Reader's Digest version with high-speed trading on the back end. And there you have it, the new Wall Street, taken right out of Manhattan and put into the cloud for everyone to enjoy.
Jerry, how could our listeners get in touch with you? What's the best way, to email or to go to your website?
Well, actually, if they just go on Google, Yahoo, or Bing and type in the two famous words Wall Street, we're on the front page. Our contact information is right there, and we encourage anybody to come along and check in with us, and we would be very pleased to take in any valid comments and the opportunity to visit with people about setting up in their particular cities incubation or whatever they would like to contribute. This belongs to everybody. Wall Street is the great American iconic name. We want to give it back.
Thank you, Jerry, for being with us this Saturday morning. We've had Jerry Burden from the Wall Street Media Company with us, and we'll have him back in the near future. Thanks again, Jerry.
You're quite welcome, and thank you so much for the interview and the time. Have a great day, everyone. Bye now.
Yeah, Jerry has a great background, which we didn't cover totally in the interview. He studied economics and business at Western State College in Colorado. He's native of Aspen, but he also attended Universidad de las Americas in Mexico, where he received a degree in studies in anthropology and ancient archaeology, believe it or not. And he's been involved in fundraising efforts for public and private companies as well as selected charities. So, again, if you want some more information, I would contact Jerry at the Wall Street Media Company in New York. He didn't provide his phone number, but it's 877-222-0205. That's 877-222-0205. Yeah, and he could be a great help, particularly if you got a company out there is trying to consider doing some of this new crowdfunding, which is really the way Wall Street is moving versus going to the brokerage firms and doing the official IPO type sequence. So thanks again for Jerry being with us, and I want you to stay tuned. We got more coming up on segment 4, a lot to talk about with the markets.
You're listening to Wall Street Raw with Mark Leibovit. Go to wallstreetrawradio.com for information on Mark's newsletters and products. Stay tuned. Mark will be right back.
High-performance investors and traders use superior financial tools to achieve superior returns. You have that tool with Mark Leibovit, nationally renowned top market timer, legendary television Wall Street Week Elf, and nightly business report market monitor, who shares with you his unique market tools and commentary at wallstreetraw.com. Here, Mark provides you with his latest ideas on how to help build and protect your wealth, help you avoid the next big market tsunami, and also stay healthy to enjoy your wealth. Mark has a special free gift for listeners of his Wall Street Raw radio show. Go to wallstreetraw.com and sign up for his free Vice News Raw report. You will receive it weekly, and it is totally free. No credit card information is required, and no one will call. Sign up today for your free Vice News Raw report at wallstreetraw.com. That's wallstreetraw.com for your free weekly report from Mark Leibovit and wallstreetraw.com.
For over 5 years, you've been hearing about the Berkey guy, so you may know a few things about him. For example, you are well aware of the superior quality and effectiveness of Berkey water filters and accessories. But did you know the Berkeys have had independent lab tests done to prove just how effective they are? It's true, and he can email you the test results. Just visit GoBerkey.com. You may also know that the Berkey Guy has helped tens of thousands of people get better prepared. Now here's something you may not know. GoBerkey.com has amazing specials and deals all the time on a wide variety of survival and preparedness products. Most ready to ship same day. Visit the Berkey Guy at GoBerkey.com and be sure to click the red Products on Sale Now button. You can always call toll-free 877-886-3653. Again, that's 877-886-3653. GoBerkey.com, home of the Berkey Guy.
So you've got to take a state construction license exam or certification. Can't decide on what books or what chapters to study? Discover right now how you can eliminate unnecessary books and wasted study time. At contractorexam.com, our study materials zero in on state-required test topics in an effective, multiple-choice format. So whether you're a plumber, electrician, general contractor, or other construction-related trade, contractorexam.com will help get you prepared. Visit us at www.contractorexam.com today.
Hi, this is Walt Augustinowicz. I'm the founder and CEO of ID Stronghold. By now you've heard our commercials about wallets that protect you from electronic pickpocketing. 10 years ago, I created a way to protect my own cards from prying eyes after government officials started talking about issuing a national ID card with a built-in radio chip called RFID. I felt having to broadcast my personal information was an invasion of privacy. Soon after, it was also announced that credit cards, debit cards, U.S. passports, hotel room keys, and even transit passes would all soon incorporate RFID. It was then I formed ID Stronghold to share my inventions in blocking RFID signals with the world. There are a lot of misconceptions out there today about RFID. I encourage everyone to get informed and get protected. Please go to idstronghold.com and get the facts and the wallet, sleeves, or badge holders you need to protect your personal financial data. You'll be pleasantly surprised that through our direct sales model, you won't pay more than other comparable unprotected wallets. It is as though the protection is free. Visit idstronghold.com today.
No other network provides the level of customer service we do. When it comes to radio advertising, we are your one-stop shop. And no matter how big or small your business is, we can help. Email us at advertise@gcnlive.com, and an experienced advertising executive will help you take the first step towards driving more customers to your business or website. Advertise@gcnlive.com. Easy, affordable, effective.
Responsibility begins and ends with our partners and our shareholders, and that's it.
There is no freedom without the law.
Get it? Got it? Good.
Welcome back to Wall Street Raw and the final segment with Mark Leibovit. Now, here's the elf himself.
Welcome back to Wall Street Raw. It's Saturday, January 16th, and we've had a tumultuous week here this past week, as you know. We've had the World Bank of Scotland coming out and telling us that we have to prepare for a cataclysmic year as stock markets could drop by a fifth and Brent oil could hit $16 a barrel. That's the projection that came out earlier in the week. They said sell everything except high-quality bonds. That is about a return of capital, not about a return on capital. And according to the RBS analysts, the markets are showing the same stress alerts as they did before the 2008 crisis. Well, my question is, why weren't they warning us before it all happened? If you were following my work, and of course I'm a bit prejudiced, but we were warning about a bear market back last May as the internal market turned negative. The old sell may go away really hit this year, though there were a few exceptions. Some individual biotech stocks and the FANG names such as Facebook and Amazon and Netflix and Google did hold up a bit, though even Apple started to give ground by the end of the year. There was warnings for months that the internal market was deteriorating. So the big sell-off is no great surprise. I think common sense says after a 5 or 6 year bull market, we were due for a shakeout. The question is, how far will this go and how long will it last? And we just have to watch the numbers. We're going to have to see a little bit of a reversal of what we saw. Remember, in August, the market nosedived, and we're back to those lows, except for the Dow, which still has to catch up a bit, but the S&P is back down to those levels in the 1850s, and market suddenly overnight reversed, and I believe at the time it was because Japan started to devalue the yen, and we started to get support coming from that part of the world as money started to flow into equities. I think China did something at that moment too, and all the central banks were in cahoots to try to get the markets back up again. Same thing could happen. We've got to watch the numbers here. Long term, if you look at the market for the century, you know that generally we do tend to overall move higher. So it's not the end of the world, though it always appears that way at the time. But we could go lower, so we have to wait for the confirmation, and that hasn't come yet. Here we'd like to take a look at a bit of history. So basically the question is, does this inauspicious start doom stocks to repeat the volatile trading range of 2015 again this year or worse? Well, the historical record does offer some hope for the bulls. Since 1928, there have been 14 other declines of 1% or worse to start the year, and yet the S&P went on to post median gains of 5% for the rest of January and 7% for the balance of the year. So the next couple of weeks is sort of critical in that comparison. So bad beginnings don't always lead to unhappy endings, but there are always exceptions. In times of unusual financial crisis, early market losses do seem to snowball. In 1930, 1937, 2001, and 2008, stocks tumbled an average of 1.7% on the first day of trading, then went on to plunge 28% on average for the rest of the year. In 1937, an example is eerily similar to the economic and financial environment we face today, so perhaps it's worth a closer look. Picture, if you will, a Federal Reserve that cuts interest rates to zero in response to an unprecedented contraction in the economy and keeps them there for years. Desperate to restart growth, the Fed and Treasury also make extraordinary efforts to expand the money supply through quantitative easing. We've seen that already. The Fed's money printing works, at least for a while, by pumping extra liquidity into the financial system and creating a wealth effect that inflates stock and bond prices, temporarily stimulating the economy, but it proves to be a phony recovery. Soon the Fed makes a mistake by tightening interest rates too soon, and the illusion of a recovering economy and financial markets is quickly shattered. If this sounds like a scenario we've all been living through since the Great Recession and financial crisis 2007-8, you're right, but it also actually describes the aftermath of the Great Depression in the 1930s. In fact, the parallels are stunningly similar. Will the Fed repeat the same mistakes today as it did in 1937 and consequently send the economy right back into recession? And are we in grave danger of repeating the same mistakes today that were made in 1937, plunging the economy right back into recession? In both periods, 1931 to 1936 and 28 to 2015, the Fed cut interest rates to zero and held them there for an extended period of time. In both periods, 32 to 36 and 2008 to 14, the Fed's balance sheet expanded massively with multiple rounds of QE bond buying, and in both periods, stocks enjoyed sizable rallies off the lows, 300% in 1932 to 37 and 200% from 2009 to 2015, but the economy improved from 33 to 36 just as it did from 2009 to 2015. The Fed decided it was time to begin tightening rates and again to start mopping up excess liquidity. On August 36th, the Fed raised interest rates by 0.5%, the first rate hike in many years. It didn't seem to hurt the stock market or slow the economy much, but the Fed tightened again twice in March and May 37. The dollar surged, credit markets tightened, and soon both bonds and stocks began to sell off. So from the 1937 peak through March 38, stocks plunged by 50%, prompting the Fed to reverse course and start easing money again. The lesson is that we don't know exactly how much tightening will knock over the apple cart. We think it could be best for the Fed to err on the side of being later, and that when it comes to raising rates. So since the Federal Reserve is widely expected to raise rates several months ahead in 2016, I certainly hope this is a good lesson for them comparing back to 1937, and they hopefully change, and I suspect they will. We're already starting to hear some comments from some Fed governors that maybe we can delay the interest rate hike. Meanwhile, looking quickly at some of the active moves this past week, as you know, with a big down week, there are a lot of big big losers. We had Priceline down 50 points. That's PCLN to 1086. We had Barclays Bank down 32 points to 5173. That's RODI. We had Regeneron Pharmaceutical down 44%. That's REGN to 463. We had LinkedIn down 20 points to 196.32. We had Chubb down 20 points. That's CB down to 109.38. There were some gainers during the week, believe it or not, but mostly related to ETFs and ETNs that were playing the short side. So I won't go over those with you. But Chipotle actually recovered a bit this week. As you know, the stock's been under pressure. It was up 62 points this week, believe it or not. That's CMG to 475, recovering from the big sell-off related to that scare on the food poisoning in their restaurants. So that was a bit of a relief for them. We had Intuitive Surgical, ISRG, up 21 points to 557 this past week. So we had a few gainers out there, but going down the list, again, it was mostly the ETNs that did well. The individual stocks were mostly knee-jerk recoveries. Speaking of recovery, we only have about a minute or so here. I'm still looking at that gold market. I know it's under pressure here this past week, but our cyclical work and other factors tell us that there could be a nice recovery here in the next several months. So we're still thinking that that gold and silver market, particularly the gold market, could be a buy here, and we are encouraging people to take a look at that with potential up to that 1,300, 1,400 area. Not necessarily a move to new highs, but something that you want to keep an eye on. And the other big question is, just how low can the stock market go? Will it hold right here and suddenly reverse as the Fed does something dramatic or some foreign government does something dramatic in the days ahead? That I can't say for sure, but sometimes out of the worst moments we see these key reversals and the environment changes and everybody is uniformly pessimistic right now. Even though I'm still on that sell signal that I put out months ago, we're still trying to keep our finger on the trigger here in case there is a sign. And frankly, looking at crude oil under $30 a barrel, this could be a very interesting area for crude oil. Just about everybody's bearish now. Now they're looking for $15, $16. And if you had talked to me months ago, I would have thought the 30s might have been a good basing period. And from here, you could see a recovery potentially back to the 50s or 60s over the next year or so. So interesting time to be looking at that market. But again, we do this technically at vrtrader.com, and we look for the signals, and that's how we determine whether there's a bottom or not. Meanwhile, as I always do, I like to quote my good friend Ed Hart from the Old Financial News Network, who's told us many times, we will know in the fullness of time. So we'll speak to you next week, and thanks for joining us here on Wall Street Raw.
Thank you for listening to Wall Street Raw with nationally recognized market timer and previous Wall Street Week Alpha, Mark Leibovit. If you missed any of today's show or to get in touch with Mark, please go to wallstreetrawradio.com. Any stocks or investment discussed on Wall Street Raw are not in any way a recommendation or solicitation to buy, sell, or hold. We first recommend you seek out a licensed financial professional for advice. Go to wallstreetrawradio.com for more information on Mark's newsletters and products.
High-performance investors and traders use superior financial tools to achieve superior returns. You have that tool with Mark Leibovit, nationally renowned top market timer, legendary television Wall Street Week elf, and nightly business report market monitor, who shares with you his unique market tools and commentary at wallstreetraw.com. At wallstreetraw.com, Mark provides you with his latest ideas on how to help build and protect your wealth, help you avoid the next big market crash, and also stay healthy to enjoy your wealth. Mark has a special free gift for listeners of the Wall Street Raw radio show. Go to wallstreetraw.com and sign up for his free weekly Vice News Raw report. While there, go ahead and sign up for his free Gold News Raw report. You will receive both weekly, and both are totally free. No credit card information is required. Sign up today for your free Vice News Raw and Gold News Raw reports at wallstreetraw.com. That's wallstreetraw.com.
Are you tired of commuting to a job that makes someone else rich, working harder than ever, but getting nowhere? Do you hate spending hundreds of dollars every week on daycare, having someone else raise your children? With our opportunities, you can start earning money as soon as next week. You get to be the boss, work from home, and live a happier life. At Be the Boss Network, you'll find hundreds of work-from-home opportunities that you can literally start today and be earning money as soon as next week. Go to freedom106.com and start earning money as soon as next week. You get to be the boss. Get out of the rat race. Work from home. Go to freedom106.com right now and change your life today. That's freedom106.com. Go to freedom106.com and start earning money as soon as next week. You be the boss. Go to freedom106.com.